Hello everyone, and welcome to the Specialist Trading presentation. Now today I'm going to be educating you on how to pinpoint strong trending markets in advance. For example, if you take a look at this chart in Apple, I'm going to show you a specific technique today by using a few tools and indicators where just by the chart right here with just the amount that you've seen, even though it looks as if we're going sideways, you'll be able to pinpoint a certain spot on the chart and hopefully be able to capture gains such as this. So this is what I'm going to be revealing today with the help of a few techniques that we have specifically for our members at Specialist Trading. Welcome, thanks once again for joining us. My name is Primo. I am the president and founder of Specialist Trading, and as you can see, we are first and foremost an educational company. That's our only goal, to simply educate all of our students and members. In fact, we have members in over 110 countries around the world, in virtually every state in the United States. Now, the reason I focus so much on educating traders is because I feel that's really the main reason why most traders fail. In fact, it's been estimated that upwards of 80% of all traders fail. And you think about it, there's so much education and so much fantastic systems and trading ideas and trading methods that are supposed to work, the traditional conventional wisdom that's out there. But if these really were valid methods of trading, then why wouldn't it be the other way around? Why wouldn't it be that 80% of all traders are successful or consistently generating gains? But ultimately, it's the other way around. It's my opinion that because the statistics are so bad is because we're being taught the wrong things. In other words, we're being taught to listen to outside sources and not the most important one, which is the market itself. Now, I know this for a fact because I've been trading for actually 40 years, and I struggled tremendously when I first started out, just the same way everybody else does. I started my trading career on the floor of the Pacific Stock Exchange, and I was on the floor for a total of 16 years. 9 of those years I was a specialist. A specialist is simply a market maker that basically made markets or specialized in roughly about 50 stocks, where if you wanted to buy or sell a particular equity, you went to go see the trader who specialized in that. So that's what I did. I traded through the crash of 1987 and the bull market that followed. I've traded in quiet markets, in straight up down in markets, in volatile markets. It really doesn't matter. I've seen every bit of trading technique out there. I've traded systems, strategies, so I know what works in terms of consistency and I know what doesn't. So this is what we do at Specialist Trading. We simply educate all of our members and all of our students around the world the things that have stood the test of time, the things that have a high level of consistency, and we mentor them and take them step by step through the trading process. We have hedge fund traders who are members and students of ours. We also have people that have just started trading within the past week, so it does not matter your level of skill or experience. Now today I have a great presentation because I'm going to share with you a couple of techniques that really can help you pinpoint strong trending moves, oftentimes before they've taken off in advance. But as always, before we begin, we are required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these techniques today, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So as you're taking a brief moment to view our required disclaimer, I would also like to take this time to invite each and every one of you to follow us on Twitter. If you haven't done so already, you may want to copy down our handle there, at SPCLSTTRADG. Every day I post new information, anywhere from little bits of wisdom along the way to signals that our strategies have actually generated. In fact, yesterday, right before the close of yesterday's trading session, I tweeted that two ETFs, the Diamonds, DIA, and the QQQs had generated buy signals. And you had a chance to get into them at the end of the day if you wanted to, or wait for today. And we all see what the market's doing and what those two ETFs are doing. So you can see this on Twitter. Follow us on Twitter. There's a lot of great free information for you to follow us on. Now, as I stated at the very beginning of this presentation, this is an educational webinar, all right? Our only goal is simply to teach you how to trade. That's where we differ amongst a lot of different websites and educators, in that we don't force feed you signals. We're not telling you what the perfect market is. We're not telling you what the perfect time frame is or the perfect way to trade. We give you all these variables and options so that you can decide for yourself. Remember, we're an educational company. Our only goal is to provide you with the information that has stood the test of time. As I stated earlier, when I first started trading, I struggled tremendously. So I know what many of you may be going through. my mentors taught me the same things that I teach my students. So I feel that what they taught and shared with me and revealed to me helped to sustain my trading for 4 decades now. And so hopefully I can do the same with all of our students and members around the globe. So as you'll see today, we really pay a lot of attention and detail to educating you and informing you on what we feel is the correct way to trade. Now, today's class and presentation is going to be conducted like a class, so I will take questions, but I kindly ask that you wait till the very end of the presentation to ask any questions. Many times, if you just wait for the next slide, your question will be answered. And so I don't want to stop every few moments to answer a question, or else this will turn into a 5-hour presentation. There will be so many questions. So if you happen to have a question, kindly wait till the end in the next half hour or 40 minutes, and then we'll answer all of them. Now, I will answer only one question in advance, and that is the most popular one and common one, and that is this being recorded? Yes, it is. So if you have technical difficulties or if you have to leave early, don't worry. You can request a link to this recording from Pro Trader Strategies, and then we'll provide you with a link. Okay, so once again, if you just happen to join us, we have a fairly large crowd here today. Kindly wait till the end of today's class to ask questions, and I'll get to each and every one. All right, so let's begin with today's class. Now, first of all, I want to ask a question. How can we determine the overall trend? That's the first thing we have to look at. Not the short term, not the really immediate trend, but the overall trend. You know, I've often stated that trends are like the ocean. In other words, if you're looking at the very, very short-term trend, those are like the ripples or the small waves coming in to meet the shore. If you're looking at the intermediate trend, those are like the waves that you're seeing cresting out on the distance. But if we're talking about the overall trend, these are the currents that you can't even see. They're way out in the ocean, but they determine everything. And they're usually very silent and huge. These are the things that cause tsunamis. That's how powerful they are. But you can't see them. But these are extremely powerful, and we want to know how to determine what the overall trend is. Now, if we just look at a few examples here of charts, here's an example of the QQQs. We see that in hindsight, looking back about 5 months or so, obviously the overall trend has been up. And as we look at fossil FOSL, we see that obviously the overall trend is down. And it doesn't matter if we're looking at stocks or if we're looking at daily bars. We can apply this to intraday charting. We look at the futures here. These are the E-mini futures on a 2,500 tick count. All right, these are the tick bars. And as you can see, the overall trend is up. So it's easy to see in hindsight that these were strong trending markets. But we have to ask ourselves, how can we determine first and foremost the overall trend before we try to capture these trends in advance? Well, actually, it's very simple. This is one of the first things my mentors taught me, and this is by applying the buy-sell line. An extremely simple but very, very powerful tool to apply. And what is the buy-sell line, you ask? Well, it's basically just a 50-period simple moving average. That's all it is. But that's how simple trading is. Remember, we want to focus on things that are simple and that have stood the test of time in terms of consistency. We don't care about overcomplicating our trading with all these convoluted indicators and following every news event and looking at all the support resistance and finding out and seeing what all the institutions are doing. We don't care about that. We just want to learn how to listen to the market. And this is what we teach you at Specialist Trading. So how can the buy-sell line help us with the overall trend? Well, remember, looking back in hindsight, it's easy to see that the overall trend was up here, but how could we have known back here that the overall trend was going to be up? Well, you simply apply the 50-period simple moving average, and we knew well in advance that the overall trend was up because price is above. The main rule is if price is above the 50-period, the overall trend is up. And if price is below, the overall trend is down. It's that simple. We don't have to overcomplicate things. Let's look at FOSL. Obviously, in hindsight, easy and safe to say that we're in an overall downtrend, right? But how could we have known well up here in advance of this strong downward move that we were in an overall downtrend? Well, you apply the 50-period simple moving average, and it's easy to see that the overall trend was down well in advance of that downward move because price was below the 50. How about intraday trading? Well, here's that 2,500 tick bar chart of the E-minis, okay? This was just on the 15th a couple of weeks ago in March. How could we have known in the beginning of the day, prior to that large move up, that we were in an overall uptrend? You apply the 50-period moving average. And we knew the day before that the overall trend was up because price was closing above the 50-period moving average. So that's how simple trading can be if you want to find out what the overall trend is. Go ahead and experiment right now with yourself. Go ahead and look at any chart you've been trading or anything. The reason why most traders fail is because they're out of sync with this first simple rule. They're usually selling above the 50-period moving average and buying below. Okay? Go back and look at your last trades. Go back and look at what you're trading currently right now. Oftentimes it will work. You will see some nice shorts above the 50 and some great buys below, but over time we're talking about consistency. And you will not be a consistent trader if you're not in sync with this simple rule. So remember, if you're above the 50, the overall trend is up and therefore you should only be buying. If you're below the 50, the overall trend is down and should only be selling. Okay, and that's just using the standard tool. But we're going to bend the rules a little bit when we get closer to finding out in advance. And I'll show you how. Now, we still miss the beginning of these big moves. How could we have pinpointed the beginning of this trend in advance? Here's where we're going to bend the rules just slightly a bit, but with the help of another trending tool. That's by applying the PET-D. This is probably the most powerful tool I've ever used in my 40-year career for finding out what the short-term trend is. All right, now we just figured out what the overall trend is, but how could we know what the short-term trend is? Well, we apply the PET-D. I was first taught this on the floor some 40 years ago, and just a small amount of traders were using it at the time. So what exactly is it though? Well, it's a proprietary algorithm. Remember, I was first taught this and we had to actually calculate this by hand. It's not very difficult, it's just cumbersome. And if you're intraday trading, there's no way you can calculate it by hand and get ready for the next bar. You couldn't do this with tick charts or 5 or even 15-minute bars, because by the time you figure out the calculation, it's time for the next bar's calculation. So we've made it a proprietary algorithm and we've turned it into a color bar tool. So there's nothing you have to do. It simply generates colors. The green colors are for a short-term uptrend. A red color is for a short-term downtrend. Now this tool, remember, is not a system. It's not a trading strategy. And one of the best ways to use it is as a signal confirmation tool. So regardless of what method you're using, whenever you get a signal to either buy or sell, if you confirm it with the PET-D, you will increase your odds for consistency. So therefore, if whatever strategy you are trading, if it generates a buy signal, then the PET-D should color that bar green. You will have an added level of assurance that most likely that trade is going to work out. If you have a sell signal, that bar should be colored red. Those are the only two colors in the PET-D. Okay, so you have to have a red bar if you're getting a sell signal because the PET-D must confirm it. Now those are the standard uses for the PET-D, but we've also found a very, very popular as well as powerful tool for the PET-D that we're going to be sharing with you today, and that's as its main use, an early trend detector. But we're going to show you how you can apply it and really enhance your trades. All right. So here's the setup. First of all, remember, if we're looking at an uptrend, a short-term uptrend, the bars should be green. And if you see a series of red bars, the short-term trend should be down. Looking at this example here in Aetna, we see here that we had a really nice run-up in March. And this is the way most people trade. They'll see either through some event, maybe some news event that comes out here, or maybe the institutions they follow, the report comes out that they like the stock. And so this is where we usually jump on board to buy, somewhere around this level. And we think, wow, this is on its way to a nice upward move, so I'm glad I jumped in. And then this is what usually happens, okay? Look familiar to anybody. Here's how the PET-D can help you. It's not a predictive tool. It's not designed to get you into the bottom or get you out of the top. It just basically translates whatever market, whatever time frame, whatever direction you want to find out at that precise moment. So as we can see, once we apply the PET-D, we knew well in advance that we were in an uptrend down here. And we knew well in advance before the market fell out of bed that the bars turned red. It was time to look for a selling opportunity because the trend was going lower. All right, so how can we pinpoint early trends with the PET-D? Here's the setup I want to share with you today. It's a great trading setup. It requires the buy-sell line, which I'm sure everyone has. It's just a 50-period simple moving average. You can apply on any charting package. It requires the PET-D and a 3-bar pivot high or low. Now, this is where people get a little confused. They're not familiar with what a 3-bar pivot high or low is. It's simply a 3-bar pattern, all right? Bar number 1 creates a high. bar number 2 creates a higher high, and bar number 3 creates a lower high. So you have this type of an arrowhead approach, okay? What you want to do is apply the PET D and see that all 3 of these bars are green, okay? If you see that, and if this is below the buy-sell line, remember we're going to bend the rules a little bit. We're going to be below. Well, that's our buy or our signal that the trend is changing, okay? Now, conversely, here's the 3-bar pivot low. You have bar number 1 makes a low, bar number 2 makes a lower low, and bar number 3 makes a higher low, creating this type of a V formation here. Once you apply the PET D, you want to see that all 3 of these bars are colored red, okay? And we are going to sell this or determine that a short-term trend is about to begin only if we are above the buy-sell line, okay? It may seem a little wordy, but let me show you a bunch of setup examples, and we can show you how simple it is to catch some of these moves in advance at times. All right, letter T. As we can see, we have the buy-sell line added, and we have the PET D as well. Now, the first thing we ask ourselves is, where is price in relation to the 50-period moving average? Well, price is below. So the overall trend is down. Now, using the standard conventional way, if we're simply buying and selling based off of strategies, we're not going to buy anything. We're only looking for sell opportunities. But here we're trying to view a trend change in advance. All right? This is not a strategy. It's not a system. We're just trying to know in advance when a trend is about to begin, well before anyone has figured it out. All right? So we are below the 50-period moving average. We have the PET D applied to the bars. And what do we have here? We have 1, 2, 3 green bars, and they've created that short-term pivot high. Okay? So what does this tell us? It tells us if we trade above here, that could be the beginning of a trend change. Now, the very next bar, we did trade there. Okay? So, what does that tell us? Well, it tells us that the stock jumped 15% in just 1 month. You see how simple that was? It was all because we were below the 50. We created that short-term pivot low. All 3 bars were green, and that was our signal that the trend was changing. So you could therefore look to get on board with some type of buy scenario. Now remember, we still need structure to buy. This is not a strategy or system telling you to buy at the market. But perhaps you were short, or perhaps you were looking to buy a stock, or this particular stock. This would give you the impetus to start looking for some structure to enter into this trade on the long side. How about QEP? All right, first thing we ask ourselves, where is price in relation to the 50-period moving average? Price is above. So it's telling us that the overall trend is up. We don't have to listen to some guy in a chat room. We don't have to listen to somebody on TV. We know the overall trend is up, but we're looking to see if we can know in advance if the trend is about to change from up to down. How can we do that? Well, the PET D helps us. We have the PET D out here. We see all the bars are green. Now we see a series of red bars. And what do we have right here? We have a low followed by a lower low and a higher low. So this is creating that short-term pivot low. Now this may foresee the beginning of a downtrend. We don't know yet. We have to trade just below here. Okay? All right, so let's see what happens. Well, the very next bar we did, so you could say that this is a high probability that the trend is about to change. Let's say you were long QEP or maybe thinking about getting long. You know, the overall trend is up, so you know, there's nothing wrong with thinking about getting long. Well, because of this sign right here, you may want to sit on the sidelines a little bit. We're not saying you're going to go short, but you may want to sit on the sidelines. Let's say you're more an aggressive trader. Well, you may start wanting to look for shorting examples because QEP right off the bat fell 20% in the next 2 weeks. Okay. Let's look at some more examples here. Facebook. This is an older example, but once again, we are below the 50-period simple moving average, so the overall trend is down. But nothing stays down forever, and nothing stays above the 50 forever. So we want to make sure that we're ready if the trend is about to change to go above the 50. Well, we have the 3-bar pivot high right here, high followed by a higher high, lower high. So this is telling us if we trade above, that most likely the trend is going to change. And look what happened. The very next bar we traded above. So that's our signal that, you know what, we may have a nice big trendy move to the upside. And the stock gained 13 points in the next month. Okay? We want to go for a more expensive stock. Well, here's Amazon. Obviously, we are above the 50-period moving average. So once again, the overall trend is up. If you're going to be doing anything, you should only be looking to buy, or you should already be in the stock. But right here, we may be having an early warning clue from the market telling us that the uptrend might be coming to an end. It's not telling you to sell, it's just telling you to be careful. This is a great way to protect yourself. Why? Because we have 3 red bars that create that 3-bar pivot low. And if we trade just below there, that's a signal that the trend is changing. So we see on the very next bar, we traded below there, or 2 bars we traded below. So that's a good sign that the trend is going to change. If you were long Amazon, you may want to move your stop up, or you may even want to just exit altogether because the stock fell 93 points in the following month. Think that could have helped you at all? Here's a good example about how the trend, a lot of students always say, well, Steve, what about these trendy moves where the trend goes up and down and up and down? Well, we can still apply it to that. It doesn't matter because all we're doing is listening to the market. We're following the market. But mostly when the trend goes up and down in kind of a whipsaw or rangy market, most traders are always a day late or in $1 short. By the time the news comes out, by the time some guy in a chat room tells them what to do, they're buying at the top and selling at the bottom. But here, as we look at GGP, we could have known in advance that a trend change was happening right here. We have that 3-bar pivot high below the 50, and the stock went up a quick 4 points, okay? Now, if you were long, let's say you decided to get long somewhere around here, and at this point, you may have wanted to take caution because we're now above the 50, so the overall trend is up. But we've created that short-term pivot low, and we went through. So here is signaling a trend change to the downside. So maybe you'd like to take your profits or get out of the trade altogether because we went down another 3.5 points. Okay? The only trouble is that most traders do the opposite. They wait for the news to come out, they wait for the volume, they wait for the support and resistance line or what the institutions are doing, and they usually buy up here. And then by the time the trend has really changed, they say, boy, I can't hold on any longer. They get out here. They do the exact opposite. I know this from firsthand experience because when I first started trading, this is what I was doing, even on the floor. Even with all the advanced information I was getting, all the tools I had, I was doing the same thing that someone would do when they first start trading on their own. Now we can apply this to an entirely different market, the Australian dollar, the currency pairs, okay? We're below the 50, so the overall trend is down. But perhaps we're getting the inkling that maybe that trend is going to change. How can we know in advance? Well, we have 3 bars right here that are all green by the PET-D, and they create this short-term pivot high, okay? So, as you can see there, that's that little kind of arrowhead approach. If we trade above, it could be a signal that the trend is about to change. Now, it traded above on the next bar. We don't have to close there. All we have to do is just trade 1 or 2 pips above, which we did. So that's the market. Remember, once again, our only goal is to listen to the market. We do not care about what others or indicators say. We're only concerned about what the market is telling us. And the PET-D is simply a translator. It doesn't predict anything. Doesn't tell you when a trend is going to start, doesn't tell you when it's going to end. All it does is listen to the market and translates what the market's going to do. The market is telling us that there may be a trend change, not the PET-D. The PET-D just simply translates what the market wants on a fine-tuned basis. So the market was telling us most likely it's going to change its trend, and look what happened. The Australian dollar gained 365 pips in the next 2 months. Now that's on a daily time frame. We could also go down to a 60-minute time frame, okay? Same concept. We're not going to change anything just because we changed markets or because we changed time frames. We're above the 50, so the overall trend is up. But what do we have here? We have 3 red bars, and they've created a short-term pivot low, type of a V approach. So this is an early warning that we may be about to change trends, to get ready. There's our trend changing confirmation because we traded below, and in 1 day, the euro yen fell 100 pips on an hourly time frame. Let's look at the E-mini. Here's a 15-minute chart looking back just a couple of weeks ago in March. All right, we are below the 50-period moving average. Nothing changes because we're in a different market now in a different time frame. On a 15-minute time frame, we have 3 green bars, and they create that pivot high. So we know that if we trade 1 tick above there, we don't have to close. All we have to do is just trade there. That may be the sign of a trend change. And 2 bars later, we did trade there. So you may want to take caution or get ready to go long if you have your strategy or something generates a buy signal, because the stock, or I should say the E-mini futures, generated a 25-point gain in just one day, the very next day. Now that's $1,250 per contract. We're not saying that everyone would have stuck out to gain 25 points, but that's how much room you had to work with because of the simple trend changing technique. Let's look at a 2500 tick bar chart. This was on the 21st, just last week of March. We come in on this tick bar chart above the 50, so we know that the overall trend is up. All the bars are green in the first hour or two of the day, and then what happens? We have 3 red bars. Now, someone would say, well, Steve, we're above the 50, so the overall trend is up. Correct, and you should only be looking to buy. But here is once again a signal coming from the market. The market is telling you, not some indicator, not some guy in a trading room. The market's telling you, I may be about ready to change trends. I'm giving you a little advanced warning before you have to wait for me to go below the 50 period. So if we trade below there, which we did, that's the market telling you, I think we're changing trends. And then look what happened. The E-mini dropped 30 points in the remainder of that day. That's $1,500 per contract. We're not saying you would have stayed in that whole time short if you got short, but it's up to you. That's how much you had to work with to the downside. Now here's what most traders say. They say, well, Steve, points to remember, this is great, but where do I get in? Where do I get out? Where's my stop placement? Where do I, exit? Remember, this is not a complete strategy. All we're teaching you today is a finely tuned way to find out in advance, to pinpoint if a trend is about to change well before anyone or anything says so. Why? Because the tools we're using are listening to the market. They're not listening to anything else other than what the market is saying it wants to do, okay? But we haven't talked about entry signals. Where will we get in? We haven't talked about where to place a stop. We haven't talked about where you get out. Would you want to go for the full 30 points to the downside in the E-mini, or would you want to just take a quick couple of points and get out? And we haven't talked about money management. How many shares should you be trading with? How many contracts, okay? These are all important pieces of the puzzle if you are trading a strategy. But we didn't share with you a strategy. All we've given you is a finely tuned technique to tell you when the trend is about to change. And this is probably one of the most common emails I get on a daily basis. Someone will be saying, Steve, I've been trading for 5-10 years. I love the simplicity of your techniques. I love everything. But you know what? I don't have a strategy. The strategy I purchased for $10,000 doesn't work. I've spent and wasted so much money going to these courses, going to these colleges, going to these academies. Nothing works. And I can't believe all the money I've wasted for these things. All right? Well, we're going to be talking about one of our best strategies today that you can apply to this. This is strategy number 4. I was taught this once again on the floor of the exchange, and I have been using this strategy in my own personal trading in some capacity for the last 40 years. Let me share with you some of the information and some of the highlights about strategy 4. It's for all traders, from beginners to advanced. We have, once again, hedge fund traders trading this. We also have people that just started trading strategy 4, because when you become a member of the strategy number 4 course, everyone gets the same information. All right, we don't start out and say, well, okay, we're going to teach you the only way to trade this, and everyone has to follow the rules. No, we give everyone a standard benchmark, and then we work with you individually to find out what type of trader you are. Are you someone who likes to catch quick momentum moves? Well, that's the way this was first designed, because when I first started trading on the floor, we were in and out of the trade in maybe 5 minutes. But we teach you ways in which to stay in this trade days, weeks, months if you like. So you have to decide, do you want to stay in the trade long? Do you want to stay shortly? Are you a very aggressive trader? We have ways to make this more aggressive for you. Are you a more conservative trader? Well, we have ways to cut down on the risk and make it more conservative. So we give everyone the standard benchmark, and then we work out from there to meet your needs. Now, the intensity level of this strategy, if 1 were the most intense of all strategies and 3 were the least intense, this is right in the middle at a level 2. So it's a very moderate strategy to learn. It only uses 1 indicator. That's it, because it's a pattern recognition strategy. We teach you a specific pattern to look for. And guess what? You already know what the indicator is. I've already shared it with you. It's the buy-sell line, the 50-period moving average. Okay? This can be applied to any time frame, any direction, in any market. That's why I think it's probably one of our most popular strategies, because it can be transferred over so easily. onto different markets and time frames. Now, if you become a member of the course, you receive automatic buy and sell indications. We give you the add-on, but that's for educational purposes only. All right, it will create indications and arrows telling you when a buy and sell signal has been generated. But remember, we want you to learn how to spot this on your own. It is in no one's best interest for you to simply and blindly follow an up and down arrow, because that would go against our entire philosophy. We want you to be in charge of your trading. We're an educational company. We're not just force feeding you signals, showing you up and down green and red arrows. So that's just for educational purposes only. Most of our members, after they learn how to spot a signal generated on their own, they don't use these anymore, okay? Our edge here at Specialist Trading is consistency. We have a number of methods that are very consistent, but we're not going to sit here and tell you that every trade is a winner. That's silly. In fact, if anyone ever tells you that, I would run. I've been trading for 4 decades now. I know that's not true. I mean, think of any other profession, entertainer or an athlete. Nobody has a hit record or hit movie every time out. No one scores a basket or hits a home run every time, but they are still at the top of their level. It's the same way with trading. Not every trade is going to be a winner. As long as you manage your losses and you have a method that's able to recoup them quickly and consistently, then you will be on that road to success. And this is what we teach and mentor all of our students. Now, let's see how we could have applied that to the examples I just shared with you. If you're trading and you see that there's a trend change, okay, remember that's not a signal for you to simply buy. And I'll show you in just a few moments why it's not. It's a signal that the trend may be changing and you may want to get ready to reverse. You're going to have an advance warning because you pinpointed when this change took place. All right? Now, if you had strategy number 4, well, guess what? It generated a buy signal right here. So you could have had a very nice place to purchase telephone prior to the big move up. Okay? So that's how you can use this technique. You first know in advance before anyone else that a trend has changed, and then you apply the strategy, put the structure together. How about Amazon? This is why this is not a strategy. Because let's say you say, well, Steve, I don't need to be a member of the Strategy 4 course because I would have just sold here. Okay, what if you had just sold once it traded below? Then look what happened. You would have most likely scared yourself and stopped yourself out with a loss before the trend started to move in your favor. But if you had used strategy number 4, you could have taken advantage of the sell signal right here and captured a very nice profit on the way down. How about Facebook? All right, well, we had a trend change right here. You could have taken advantage of the first buy signal, which was the breakout bar. And then if you missed that, there was another one generated right here. So if you miss one, there's always one coming along as long as there's a strong trend in place. How about the Australian dollar? Well, it generated a very nice trend change right here. How could we have taken advantage of that? Well, there's a buy signal right there. Even though we didn't catch the bottom, you have the assuredness of knowing that you have a method that is in sync with the overall and the short-term trend and has a high level of consistency. How about that E-mini trade where the futures fell out of bed and you had advanced warning right here, okay? Well, remember, we're not trying to get in at the top and get out at the bottom. That's really a gambling mentality, and it's a recipe for disaster because, you know, going to the well once too often trying to pick a top or a bottom will ultimately give everything back. We're trying to find the meat of the movement and then jump on board. If you had strategy number 4 along with a pet D, well, you would have seen this trend change in advance, could have sold right here on a strategy number 4 sell signal. And if you missed that one, well, there was another one generated just a few points lower, and then another one, and still another one. So there's no reason to worry and think, well, gosh, I missed that move, because there's always one around the corner. All right, so let's recap before we go to questions and answers. Remember, we shared with you the buy-sell line. And what is the buy-sell line? It's the 50-period simple moving average. Virtually all of you can go to your computer right now, look at past trades, apply the 50-period moving average line, and I can almost guarantee that the majority of your losses were because you were buying below the 50 and selling above. Remember, we showed you this technique where it was below the 50, but simply for identifying and pinpointing a trend change. It wasn't a buy or sell signal, all right? So go back and do the work. You'll see that there is a high level of consistency if you are in sync with your trades, if you plot the 50-period moving average. Secondly, we share with you the PET D. I have been using this every day for the last 40 years. I used it this morning in trading before we began here today because it is that powerful. It gets me in sync with the short-term trend, but more importantly, it confirms my signals and it will tell me in advance when a trend change is supposed to happen. It works extremely, extremely well. Now, we also shared one of our most consistent strategies, strategy number 4. Okay, it's a method that is based off of a pattern. I can't share that with you because it wouldn't be fair to the people that have purchased strategy number 4. But you saw the signals it generated. Those were actual strategy 4 signals in sync with the PET-D. Now, when you combine the PET-D, the power of knowing the short-term trend, along with the buy-sell line, the overall trend, along with strategy number 4, you create one of our most popular as well as powerful methods. That's our dynamic duo. Okay? So here's what we're going to be offering you today. Before we go into the sales at the end, I'd like you to ask yourself, before we go into questions, ask yourself, let me ask you a question. Do you think any of these edges I presented and revealed today could have helped your trading this past year? We're already into April. We're already into the 4th month of the year. Are you anywhere near where you thought you'd be at this point? Pretty soon we're going to be halfway through the year. How is your trading going? Do you think any of these edges that I just shared with you today could have helped your trading? Well, here's the good news. We have a special attendee discount for all the people in attendance today. We're going to be offering you our dynamic duo at a specially discounted price. This is strategy number 4 along with the PET-D. You're going to get instant course access, detailed instruction. I'm going to explain and reveal all the entries you can apply, all the exits, all the stop placements. It's going to come with signal alerts. All right, we're going to alert you when these signals are included. We're going to include both of the add-ons. So the add-on that will automatically paint the bars colored green or red for the PET-D. It's also going to be the add-on that will generate the up and down buy and sell arrows. All right. This comes also not only included with the rules of strategy 4, we're also going to give you 4 PET-D trading techniques. All right. Let me share with you something. Remember that first chart we showed at the beginning of the presentation in Apple? I told you how you could have found out in advance when a trend was about to most likely begin. Well, here's that chart once again. Excuse me. Once again, in hindsight, it's easy for someone to say, well, Steve, easy to see coming into April, we're in an overall uptrend. Well, what's the first thing I taught you today? To find out what the overall trend is, all you have to do is apply the 50-period moving average. Now, we would have known as early as mid to late December or the beginning of this year that Apple was in an uptrend right here, okay? Now, if we wanted to find out where that trend was going to change in advance, we apply the PET-D. Excuse me. And using the technique I shared with you today, we see here that we had that trend changing technique right here. So here's where we knew in advance that most likely a very strong trend was going to happen. Here's what we also provide with you in the Dynamic Duo course. Because remember, we also provide for a limited time email alerts. Now, if you're a member of the Dynamic Duo course, on the 27th, you would have been issued an email that generated our signals for that particular course that you're in. Now, as we see here in Apple, there was a strategy number 4 buy signal that was generated for either entry. If you're an advanced trader, you could have entered on the night of the 27th or the next day, the 28th. But remember, these are for educational purposes only so that you know what to look for. We don't want you simply taking these as trading signals. These are for educating you so that you know what to look for or checking your work. If you would have noticed a buy signal in Apple, and then once you got the email alert that night, you could have patted yourself on the back and said, hey, okay, I guess I'm getting this pretty soon. Pretty soon I'm going to be able to trade this with real capital. So as we can see here, here's where the buy signal was generated. And I know someone looking at this would say, but Steve, you taught me this technique way back here that the trend was going to change, and I would have missed all of this big move. Now, granted, going long Apple right here, I would have gotten a quick 4 or 5 point gain in a couple of days. But what about all of this? Well, remember, I just showed you the most recent email alert. If you were a member of our course, well, you would have received an email alert back here. This is a strategy number 4 buy signal on the 3rd of January. And if you missed that, well, there was another one about a month ago on the 9th of March. So that's the beauty of this. Once you understand how to use the PET-D, once you understand how to use the 50-period simple moving average, once you understand all the rules to the pattern of strategy number 4, you can be able to take signals like this, okay? And we're there with you every step of the way. So this is all included in the Dynamic Duo course. Included with this comes 40 years of experience as your mentor. You have a complete mentoring correspondence with myself via email. Now, if you purchase these courses separately, it would run you close to $4,000 or $5,000. We're discounting the price today down to $36.90, but we're not stopping there. For all the attendees today, for a short time, we're also discounting it another $700 roughly, down to $29.95 for these two packages together, our Dynamic Duo. And we're not stopping there as well. We're also including payment plans. So if you can't come up with one lump sum of $29.95, that's okay. For a small deposit, you can be up and running and still be a member of the Dynamic Duo course, and you can have a payment plan structured for it. So here's how to take advantage of this great deal and have me as your personal mentor teaching you how to use these great tools. Contact my sister site, which is Pro Trader Strategies. They manage and promote all of my courses. You can email them at trading@protraderstrategies.com. They have numerous trading consultants standing by waiting to take your call also at area code 310-598-6677. Now, if you just want to sign up and go right up to the sign up page, you can click on the link. That link is at the very bottom of the page here, but that's not a live link. You'd have to copy and paste that onto your browser. If you'd like to get a live link where all you have to do is click it on, go to the chat box on the far right of your GoToWebinar column there. And they have put a live link on the chat box. There it is. Yes, I see it right there. So to learn more, you can get the offer, use this link. And there's the link that's provided, okay? So there's lots of great information. And remember, don't hesitate to contact Pro Trader Strategies if you'd like to get a particular payment plan, because they can set one up for you individually to meet your needs. All that is required is a small deposit, and you can be up and running ASAP. Now, I'm going to leave all this information up there so you can copy down the number or call them up, and I'm going to answer your questions. And I want to thank you for waiting. Okay? Let's see here. The PET-D is an abbreviation of what? The PET-D, Monica, is an abbreviation of the Primo Early Trend Detector. Now, when I first started using this 40 years ago, we didn't call it that because it was something that my mentors had taught me. And at the time, it was just called the formula, okay? And, it was something that you had to calculate because, trust me, at that time, we didn't even have indicators on our screens. In fact, we didn't even have charts. Going back to the 70s and the early 80s, all we had was quotrons at the time, which just basically were a series of stocks and then the high, low, and close, and similar to a spreadsheet. But there were no charts. So we had to calculate this formula by hand. Now, with the help of high-speed computers and programmers, we've turned it into a color bar algorithm. And so we gave it a name, the Primo Early Trend Detector. But I've simply just developed it. By no means did I create this, or did I discover this, or did I properly generate this on my own. This is just something we gave a title to because we developed it, myself and Pro Trader Strategies. Someone is asking, what is the E-mini? The E-mini are the futures for the S&P 500 index. So basically, you can't trade an index because it's simply just an average of all of the stocks in that index, but there are different ways to trade it. You can either buy or sell through an ETF, such as the spiders. That's simply a stock that's based off of the index, or you can trade futures. For more information, since we're not a brokerage firm, probably best to contact your broker and they can explain everything for you, okay? AJ is asking, is the PET-D available for TradeStation? It certainly is. In fact, I use TradeStation a lot, and that's where I use it. And all the examples you saw in this particular presentation were taken from the PET-D being applied to TradeStation. So yes, okay. Joanne wants a link to the recording sent. Yes, Joanne, you will get a link to this recording. But one thing I do want to just suggest and recommend, don't sit on this, because this special discount, once again, is only going to be for the next couple of days or so. If you wait till the weekend to watch the recording and then you think about it for another week and say, you know what, I'm convinced, boy, I like this stuff and I'm going to join the course. Well, it may be back up to the original price, which is close to $5,000. If you'd like to get in at a really discounted price of $29.95, And with a payment plan, you have to do so within the next couple of days, okay? Because it's a limited offer. So I would, if you're going to watch this recording again, watch it today and tomorrow. But then if you're sure about taking your trading to the next level, you have to make the decision quickly before you lose this great discount, okay? Remember, once again, if you look in the chat box in the far right-hand corner of the GoToWebinar page, that's where they have the live link, okay? So there's lots of different ways to set this up. In fact, if we can just want to give you a little advanced warning here, we can also set this up for you on our PTS Primo chart. So a lot of you may not have TradeStation, you may not have Metastock or NinjaTrader, which it runs on those platforms. But if you have, just your brokerage house platform, which doesn't carry any of these other tools, you can contact us, and we have a new platform that we're going to be discussing and bringing out very shortly. That's our PTS Primo charts, and you can run all of this on them with ease. Everything is just one stop right there. So contact Pro Trader Strategies. Remember, there's no obligation, and they will fill you in on all the information provided, okay? Okay, remember, once again, we're nearly at the halfway point of the year. We're, in the first quarter or just about past that. And, look at your trading. If you are nowhere near where you thought you'd be, now's the time to elevate your trading. Now, trust me, I know what you may be going through. I know what it's like to really struggle and to really be discouraged when you're doing all the things you're supposed to and it's not working, right? I know what it's like. In fact, it will work every once in a while, but the times it doesn't work, you give everything back and you're right back where you started. In fact, you're probably less than where you started because you're giving back more of your profits. So it's extremely discouraging. I know what it's like. If you'd like to get on that road to consistency, I think we can help you. All you have to do is contact Pro Trader Strategies. They can give you more information. And in a matter of minutes, you can be up and running. You can get all the information, and you can be emailing me questions, and I can be your personal mentor and help you along the way, okay? So this is a great program. In fact, this is our most popular package we have to date. This is our Pet D strategy number 4 course, which we call the Dynamic Duo. That's how powerful it is. So come on board, change your trading for 2017, get on that road to consistency, and thank you so much for attending today. I hope you got something out of this, and I look forward to all of you becoming students of mine and members of the Dynamic Duo course. Thank you so much. We'll see you next time. Bye-bye.